Hello everyone, welcome to Thai Finance. Today we're going to discuss which companies are undervalued, and as well we're going to have a look at my personal portfolio, and I'm going to give you some tips for you to know how to find excellent bargains in the stock market. So, what is undervalued? Well, it's something that is cheaper in comparison to an alternative. For example, if you are looking to buy a product, you need to know why this company is giving you this product cheaper than the other company. So what added value is giving me this product that the other doesn't have? So how companies are valued? First of all, investors are willing to pay a higher share price today because of growth expectations in the future. Imagine you own a cow. So which price you will give to the cow and what value could produce in the future. For example, it is determined by the weight or by how the animal was fed or by its own health. If you ask the butcher, it will tell you that it depends on the cuts of filet mignon, short ribs, and many other cuts. But at the end, if you don't kill the cow, it can give you milk for a lifetime. So at the end, you need to know how much is going to give you that asset in the future. For example, a cow can feed you forever. So its value today is not exactly representative of what can give you in the future. So companies are valued like that. Basically, companies have assets and liabilities. If you cancel them, you get a value of it, which is the equity. So it's not that simple. This is why you have to do a financial analysis and look for things that are adding value to others. And this way you can have more clues on how much the company is valued. So one easy way to know exactly how much market capital is in a company, well, you need to multiply the outstanding shares multiplied by the price and you will get the value. But that's not simple. People are willing even to pay more for that. Or maybe the company is undervalued. It is really important that when you look for a company, you answer these questions and see if these questions are answering the value. So what are they selling? How are they selling it? When are they selling it? Is it seasonal sales? Is it, I don't know, is it an everyday purchase? Where are they selling? Where is this product position or service or whatever? And who is running the company? So all of these things are intangible things that will give less or a higher value to the company. So it's important to do an industry benchmark. This is also linked to my first line in this presentation. You need to do a research-driven approach to the industry. For example, if you are buying a technological company, you need to do a benchmark of the technological companies. Or if you are investing in the pharmaceutical industry, well, you need to know where are standing the other competitors and research pharmaceuticals. It's very important that you do a research within the industry, and also invest in what you know, in products that you really use or you think that are great value. And if you use them, you will be more aware of the whole situation of the product, and as well you will know what they are doing. So this look for disruptive products, look at the company strategy, look at the balance sheet, cash flow statement, and the P&L. So I'm going to give you an example on how ratios can give you great hints about timing and strategy. This is an example of the gold and silver ratio, which is a ratio basically to know when is a good time to invest in gold and when is a good time to invest in silver. For example, here you can see that it goes up and down all the time, and you can see when gold is undervalued in comparison to silver, which is another precious metal, and its benchmark. Here you can see The current ratio is right now at 102. And the all-time high, that means with how many ounces of silver you can buy an ounce of gold. How many pieces of silver you can buy, which is 115. And the all-time low, it's 1539. So every time that it gets close to the all-time high, well, it's a really good time to buy. For example, in this case, is silver, and here was a really good time to buy gold. And this could apply for any company in any industry. If you have the tools to compare those companies, use them and don't just look at the price. Use ratios or other tools to find out if they're undervalued or overvalued, because the money that we use, which is US dollars, I don't know, euros or yens or British pounds, they all are floating fiat currencies. And it makes very hard to know what's the real value of something, because as central banks practice monetary policy, increases the monetary base, that makes things very confusing. So those things are really making us difficult to evaluate a real company. So you cannot skip the fundamentals. The fundamentals are the most crucial thing to know if the company is undervalued or overvalued. So really take a look at the P&L, at the revenues that they have. Maybe they are increasing sales over years. You need to compare it within 4 or 5 years. You need to know if they're having a good margin, if their operations are being really profitable. And this way we know if their operations are being efficient in producing or giving services. And we must detect if the labor force is underperforming or being very efficient, and the raw materials they are buying, they are at the right price. And one of the most important things, we need to see if they are profitable. If they're not making any profitable, they don't have a net income, there is no point in investing it. But take into account that many companies can survive for a moment without any profits or net income. But if they have a very bad balance sheet, they will for sure die. So this is where we need to put more focus in the balance sheet. Reading balance sheets today, it's really a good thing to know, and it's a skill that you can develop over time by looking at many companies. Actually, you can watch my video about the balance sheet. I will put it in the corner, and you need to see how they are managing their working capital. They have lots of accounts receivables, accounts payable. They have a lot of debt. They're waiting to receive a lot of money from customers. They're having huge inventory amounts. They're not being agile in their supply chain. Also, if with all their assets can pay all their liabilities. So the cash flow statement is as well another financial statement that you have to look, because this is, from all of them, this is the most important, because it shows you if they can survive in the immediate term. So the cash flow from operations, it's more desirable than the cash flow of financing and investing activities that measures the annual capital expenses. So it's not necessarily a fixed rule, but depending on the business, you can determine if this is more important in one industry or another. So take a look at the free cash flow, which is all the free cash flow and money available after investing in fixed assets. And as well, you need to know the return on capital and the profitability of it. You can find these formulas on the internet, and it's basically if the capital investments are being profitable or not, are they producing cash, and how fast cash is produced. So the technicals, well, this is basic, and you need to know that the trend is your friend. You need to know, you see the momentum. Maybe it's not a great time that today exactly it's a good time to enter. Maybe the recent price chart tells you that there is a lot of volatility and you need the market to cool down a bit. So you see some candles that are very high. You need to wait to cool down. There are a lot of speculative investors and there's speculation in the stock market. So You need to wait until a good time and a good momentum. You can use many tools to know if it's a good time, available in your stock market platform, and also be aware of shapes and indicators like the RSI, MACD, Chimoku, or so on. Next, your portfolio needs to be diversified. Diversify or die. It's a lot of risk to invest all your eggs in one basket. Basically, you need to really try to put your money in different industries or forms of money or assets, lower your risk, and as well protect your portfolio. And watch out for bubbles ahead. Right now, there with the quantitative easing and with all the central banks printing a lot of money, you need to be aware that the underlying asset is not in a bubble. You need to watch out interest rates. Interest rates are very low around the world right now, pushing banks to give away a lot of money to non-productive companies or people. The monetary base has been increased, making the prices to soar, especially in the stock market, where lots of companies have been bailed out, leading to overcapacity and destroying the purchasing power of the people. All of these factors are really something in today's economy that investors should be aware of. Repurchase agreement will increase as well. So all of this is affecting the stock market and creating bubbles that might increase the volatility of the market, increases our risk of investing. So you have to be watching the news and evaluate if where you are putting your money is not a bubble that it's about to burst. So try not to stay away from companies that are like pop starts at the moment, but I don't know, you need to do all the fundamental analysis, the technical analysis, and the geopolitical macroeconomical perspective. So I'm going to talk about now my personal portfolio, and it's basically divided into these fields, which is technology, pharmaceutical, mining stocks, precious metals, and crypto. So right now, times are very uncertain, but this is at the moment what I'm invested in, because right now I prefer to have more cash available rather to risk my money with all the economical uncertainties. So technology, I'm looking for disruptive products, and as of right now I have my eyes on these companies, which is Tencent, which is a Chinese company, AMD, HPQ, and Intel. From my point of view, they are really competitive. They have disruptive products, and they have lots of potential to not be overvalued. And in the technology industry, it's very difficult. It's the most difficult thing to find if they are overvalued or undervalued, because there is a lot of potential with technology, and as well there is a lot of risk. Technology is the first thing that worldwide investors take into account. There's lots of bubbles in there, but as well we cannot be away from the technology. Technology is not something that applies to all what I said, because everyone wants to be in the technological disruptive company invested in there. So in the pharmaceutical industry, I I see that Biogen, it's a good bargain because they have lots of research and development. They are in the final stages of approval of one of Alzheimer's drugs. Their financials look solid. The balance sheet is okay, the income statement is okay, and they've survived the pandemic upheaval. I have mining stocks and precious metals because they decrease the volatility of my portfolio. Now you have to have some gold, some silver. This is important because the world is crazy right now. And as well, I'm invested in a little bit of crypto because it's a very disruptive product. There's high risk involved because it's very new but very disruptive, and it's volatile. And as well, it has performed well during crises. So I'm not saying that I will be investing all of these long term. I'm gonna maybe short and long depending on the macroeconomical perspective. But I guess that these companies are right now a good bargain and a good moment to invest it because there's lots of uncertainty, as I said. Well, we have come to an end. I really hope you enjoyed the video. Please hit that thumbs up and subscribe to the channel, because if you like this, I will be posting more videos like this. Maybe you will follow my investing journey, and I will give you more tricks and tips that you can find in my channel. So please comment below. Please give me all your thoughts, comments. Maybe write if you agree with me, if you disagree with me. And this is not financial advice as well. This is my opinion, not yours. And before following or copy me, do your own research and don't approach the stock market without any information or research before investing. Investing in the stock market is very risky and you can lose all your money. So, information is power and it's key to invest. Thank you very much.